Hi, everyone. Mark Lichtenfeld, Chief Income Strategist with the Oxford Club. This is your state of the market, and the state of the market is strong, very strong. I wish I could say the same about the union, but at least the market is strong. And, I get questions all the time from friends who say, the market is strong. How can that be with the economy in the dumps? And then I have other friends who say, well, the market is so strong, so clearly that's a sign that the economy is doing really well, right?
Wrong.
I think there's a very strong correlation to what we're seeing now and what we saw during the financial crisis in 2008, 2009. Now, the 2008 bear market lasted about a year and a half. Our bear market lasted like a month. But in March 2009, the stock market bottomed. And when that happened, things were hardly rosy, right? The economy was still a mess. Unemployment was 8.7% in March 2009 and continued to rise until it hit a peak in October at 10%. First quarter GDP was terrible. It was negative 4.4%. So it was not exactly an economy that would make a fertile environment for a market bottom. But markets look forward. Now, short term, sure, they react to news, unexpected geopolitical events, but markets are forward-looking mechanisms. So in March 2009, at the bottom, the market was telling us that we were not going to go over the cliff, that financial Armageddon was not going to happen. And remember, in March 2009, there was a very real and justifiable fear that the entire financial market was about to collapse. You had banks going under, the money markets broke the buck. There were a lot of very serious problems in the economy, yet the market still bottomed. So by doing that, it told us there would be no collapse. And as the market moved higher in 2009, the economy slowly, albeit very slowly, started to improve. So in the second quarter, GDP growth was still negative, but 0.6%, certainly better than the negative 4.4% from the prior quarter. And then in the third quarter, it became positive at 1.5%. So not boom times at all, but certainly better. And then in the fourth quarter, we had a robust 4.5% GDP growth. So things really started to turn around. Now, I believe what this strong stock market today is telling us is very similar. Not necessarily that the economy is about to boom anytime soon, although it could happen, who knows, but that our worst fears about the coming Great Depression or the second coming of the Great Depression is not going to happen. And that doesn't mean that there's not going to be pain. There are tens of thousands, if not hundreds of thousands of businesses that will never reopen. There are still tens of thousands, if not hundreds of thousands more job cuts coming. United Airlines just announced 16,000 layoffs and Ford announced 1,400 job cuts. So there's still a lot of pain there. But the idea that the Great Depression is upon us, at least the market is telling us that that is not going to happen. So the big question then now is, how do you play it? How do you make money from this? Don't be a hero and buy down and out stocks unless you're in it for the long term and they pay a strong dividend that will pay you while you sit and wait. Right now, this is a momentum market. We've got stocks like Tesla's and Facebook and Amazon just going crazy, go nuts, going vertical practically every day. So if you're going to trade this market, find those hot stocks, the AMDs, the CrowdStrikes, things like that. You can also look at the biotech sector. It's my favorite sector. These stocks go crazy when they have a catalyst. Aimmune was up 171% in one day last week. This is also a very good time of year for healthcare stocks. So biotech stocks are going to have a lot of eyes on them for obvious reasons, COVID, over the next 3 to 6 months, maybe longer. There are a lot of trading opportunities if you're nimble, and this kind of white hot market is not going to last forever. So trade it while it's hot. For more on my favorite names in the biotech sector, click the link below. Thanks for watching, and I'll see you next week.